Welcome back. Well, a lot of stocks are doing well. One which is not doing well right now is Dish TV. That's down about 7%. So that stock, of course, is reacting to the news on what's happening between Dish TV and Videocon. So that stock right now at the low point, down about 7%. But IndusInd Bank has announced a mixed set of numbers for the third quarter. While profit met estimates, net interest income was a bit of a miss. Ritu Singh caught up with Romesh Sobti, MD and CEO of IndusInd Bank.
Gross NPA went up by 8 basis points, but slippages actually fell. So you see the gross slippages, they fell from 1.7% to 1.3%. So the book actually improved. And the credit cost also fell from 18 basis points to 15 basis points. So there was no chunky account. It was spread out a little bit on the consumer finance side, vehicle finance side, something on business banking, SME side, but all small values.
But the one thing that you're still awaiting is RBI's report on any divergence that could come in. Do you think that could perhaps take a toll in the next quarter as far as your credit cost and NPAs are concerned?
See, our credit cost target for this year was 60 basis points. And the 9 months, the 3 quarters results take us at 58 basis points annualized. So we are well on target in that respect. If there is a divergence which comes out, we have not received even the preliminary report from RBI yet. That will be in addition to this credit cost that we have predicted.
In addition to the 60 basis points?
Yes, absolutely.
Sir, but would you have a sense of how much hit you would have to take? Because,
No.
you do have a sense of, from the market, what are the companies where divergence has been noted by RBI? Do you have some of those accounts?
No. I mean, if it is NPA with other accounts, other banks, we will not have a situation that is standard with us.
Sir, you also said you have exposure to 8 out of the 40 NCLT accounts that have been referred to the IBC because of the RBI's list. In that respect, have provisionings been taken completely, or do you think you'll have to take some more over the next 2 quarters, especially from the second list?
So, out of the 40 odd accounts, we had 8 accounts, of which 6 were already NPA with us, so there were no provisions needed. And for the other 2, we made provisions in quarter 1 and quarter 2.
Okay.
So no provisions were made this quarter.
What is the total provisions you've made for all the NCLT accounts?
The additional provisions that we had to make was about 30 or 35 crores.
Okay. So are you seeing resolution happen in some of the cases, at least that you have an exposure to, or are bids too depressed? Is there haircuts too high, as some reports are suggesting?
Well, see, in the big ones, which are being mostly talked about in the media, we don't have exposures.
Okay.
So we don't know. But from what we hear in the market, we are seeing heading towards resolutions, especially the steel ones. So something should happen before the end of the 4th quarter.
But sir, how hopeful are you? Because some of the smaller companies, especially now that the promoters are ineligible to bid because they've been NPAs, how hopeful are you that bids will actually come in? Because that's the fear some of the bankers have, that for these small companies there are no takers.
Well, so then if there are no bids, they go through the normal process of insolvency, which is what would happen in any case.
Okay.
This was an additional route given to try to resurrect these companies. If it doesn't happen, then they go belly up in any case.
So talking about your credit growth also now, why the industry has remained depressed, your credit growth numbers have been fairly healthy. Where does that come from? And you said you're seeing some improvement. Across what sectors is that improvement coming from?
Well, we are seeing very good growth now coming back into the vehicle finance sector. That was languishing at 16%. Disbursements this quarter on vehicle finance grew by 34%, commercial vehicles 39%, and the book has now started growing in the 20s. That's a big boost to our overall credit this thing. Our non-vehicle finance is growing in the 40s.
Okay.
That's one. As far as the corporate side is concerned, we've said for the last 2 quarters that we are seeing good demand pull on the working capital side. And term lending, which is a proxy for CapEx, is also sort of growing. We've seen in this quarter, we saw it last quarter as well. Areas specifically, well, I think power transmission is an area where we have put in. In power generation also we've done it with very good sponsors on, say, renewable power, etc. So those are a couple of areas that I can easily identify.
What about the microfinance segment? So you've made an acquisition now, which is still in process. We'll come to that later. But what is the outlook there? How big is your book now?
Our own book is 3,000 crores. And of course, there was the announcement of the merger. And that's going through the process of regulatory approvals. We already have approval from the CCI.
Yeah.
The next phase would be approval from the RBI, then SEBI, and then NCLT. And as we said earlier also, we expect this process to take till the middle of calendar year 2018.
Okay, but what are the immediate benefits that will accrue once you close this merger by June that you're saying with Bharat Financial?
The benefits are very robust. On the day the merger actually happens and the book gets transferred to IndusInd Bank, our cost of funds on that portfolio falls by around at least 3.5%. So that's a straight away, it's a no-brainer sort of a situation. Then capital gets released because the risk weightages in the hands of the bank are lower than are required for a microfinance. And then you have 14,000 crores of priority sector advances coming into your book on day one. These are straight what I call non-presumptive synergies. Then there are other synergies which I call presumptive synergies, which is that none of them have savings bank accounts, and we've done pilots already with Bharat Finance, and we find that that woman borrower in the rural areas has the capacity to save up to 3,000 or 4,000 rupees every year. Doesn't have an account. So we put in savings bank accounts, we give them recurring deposits, these things, etc. So those are a savings bank base across this whole portfolio. They have 7 million clients. Okay. So imagine what they can do to a low-cost saving base.
Okay, so that's a very positive note coming in. Increase in deposits. That's what every bank hunts for because that's low-cost money and no chunky NPAs. The only caution is that RBI has completed its audit and not yet given the report. So there will be that bit of caution which investors will have in their minds. With that, let's focus on another stock which has been in the news, and that's Cochin Shipyard. It signed an MOU with the Mumbai Port Trust for management and operation of their ship repair facilities. Must be a big order. The move could serve the increasing ship repair demands in the entire Mumbai area. Significant because margins for ship repair are believed to be in the region of 30 to 33%, and that's almost 3 times the margin you get in building a ship, which is more like 11 to 12%, we understand. Madhu Nair, CMD, Cochin Shipyard, joins us on the phone line. Mr. Nair, good morning, and thank you very much for joining us. I'm dying to know a lot about this Mumbai Port Trust agreement, but you must forgive me my hunger as a journalist. Is there anything about your merger with Regin Corporation?
Definitely no. Okay. Nothing with DCA.
The government hasn't sounded you on anything?
Oh, no, nothing.
Okay. Oh, okay. So can you tell us a little bit about the MOU with Mumbai Port Trust? We understand that, you know, the ship repair business gives you much higher margins.
That's
but
right.
What will this do overall to both revenues and margins?
Mumbai Port Trust had a dry dock called the Hughes Dry Dock, which is a very old dry dock, but then it's a very effective and efficient dock. But what the port used to do is the port used to lease it out, and then the work used to be done by a consortium of various subcontractors whom the owners used to bring. We will now bring in end-to-end solutions based on our ship repair domain expertise here. And we will make some investments also there because there is a fair bit of upgradations and revamp that is to be done. We also intend to bring in a floating dry dock. In addition to the present Hughes Dry Dock, we intend to bring in a floating dry dock also into the Mumbai area. So all in all, we feel it's a very robust situation. The Bombay has potential, and we feel ship repair growth can really happen in the Bombay area with this new arrangement.
Sir, but what is the money, Mr. Nair? I mean, how big is this order? I'm asking because whether I look at last year or the 6 months of this year, both revenue is struggling at single digits, and EBITDA is actually down.
See, ship repair, if you really look at we are in shipbuilding and ship repair, and ship repair has seen very significant growth. So if you are looking at our figures also, ship repair is over the last year, we have grown year on year, something like plus 30% year on year, you know. So ship repair is doing very well, and this year also we should be doing exceedingly well from our Cochin operations. This is why we are looking at the Mumbai operations. See, Mumbai, I would expect straight away in the first year, that is FY19, 100 our ship repair revenue turnover point of view. So currently, last year we had done 550 crores here. So straight away, the Mumbai operations will add up about 20% plus into the top line in year one. And year two, we expect that to be almost doubled. So there is going to be significant traction, and it's purely ship repair. There is no shipbuilding that will happen in Mumbai.
Okay, so overall, if you can give us a guess as to what the revenue growth will be this year, because it looks better than last year. So this year revenue growth, and on that, what can be next year's revenue growth? Will it be double digits?
You are talking about the shipyard as a whole, not
overall. Yes, overall, Cochin shipyard.
Overall, we should do more than 12-13%.
This year itself? Next year, you mean?
This year, that's FY18.
Oh,
okay. Are you expecting ship repair orders from any other state or city port trust?
Similar to Mumbai, we are also talking to, I can tell you, we are talking to Kolkata Port Trust. But the opportunities and the business potential in Kolkata is much, much smaller. So that's more of a, I should say, bit of an experiment out in Kolkata.
Okay.
All right.
All right, Mr. Nair, pleasure speaking with you. Thank you very much for joining us with all those details on your agreement with the Mumbai Port Trust. Looks like it's a chunky order for Cochin Shipyard.
Okay, just a lot of stocks moving. Indiabulls real estate, by the way, is once again inching up. That stock is now approaching its previous high. So out of F&O now, of course, only available in the cash market, but stock up 3%. Good time to get actually some fresh technical advice. Ashwini Gujarat, Mitesh Thakkar back with us for that. Ashwini, your thoughts? The Bank Nifty is now building some gains from that morning point. How would you approach that, the Nifty and of course individual stocks?
Well, 70 points higher to 85 points higher, that's not exactly building gains. But the interesting thing is that TCS is down, but the rest of the Tata Group stocks are higher. So Tata Global, Tata Power, Tata Sponge, Tata Elxsi, everything is moving up. So that could be a theme for the day, that people can look at. So for the moment, ICICI Bank, HDFC Bank are positive, but they really need to do much more for the Bank Nifty to gain more than 100 points. Let's see if that happens. For the moment, we are long on Bank Nifty, but very tentatively long. As far as individual stocks are concerned, ICICI Bank is a buy with a stop of 308, target of 321. It's been down for a couple of days, I think, and possibly some, upside cyclically may be possible for the next 2-3 sessions. Vedanta is a buy with a stop of 334, target of 352. And Tata Sponge has resumed its rally. That's a buy with a stop of 1190, target of 1250.
Okay. Well, Mitesh is also with us. Good morning, Mitesh, again. What are you trading now?
See, Torrent Power, I think, we have been liking the pattern here, and today I think the momentum is coming in. Slightly moved up. Try to buy it around the 300, 299 mark with a stop at 292 for a first target of 315, though I suspect 325 is also very likely. And amongst the short-term charts, HDFC Limited is showing good traction on the upside, and that's a buy with a stop at 1740 for targets close to about 1780. Again, it's moving slightly, so try to buy it on a 340 kind for them.
Okay, and Sandeep Bagle is also with us. Sandeep, what stocks would you be looking to trade this morning?
Good morning, Sonia. I would go with a buy in a Sun TV, stop loss of 1055, target of 1096, and a buy in a Torrent Power, stop loss 294, target 309.
Okay, it's something definitely up in Tata Group stocks. The latest to join the bandwagon now is Voltas. Just pull out the intraday chart of that stock. It's now up trading at the high point of the day. So, Ashwini, thoughts here on Voltas?
See, again, I think there is some reorganization that the market is trying to price in. So wherever, two companies do similar businesses, maybe that is what market is betting on. Voltas has gone through a correction of, from 680 to 630. Today is the first day from the 50-day moving average. I would think this time it could cross 680 and maybe move towards 720, 725.
Okay, well, there are some sets of metal and power stocks which have been doing well for a very long time. Is there any play in Godavari Power and JSPL still left for today, Ashwini?
See, JSPL is fairly risky now because the averages have been left, way below where they should be. So you need a 30-40 point correction to enter with any sort of, risk management. As far as Godavari Power is concerned, again, 1 month back it was at 180, now at 470. Very tough to, enter such stocks. Yes, they can continue to move up, but I don't know how to enter. And maybe the closest point to enter is closer to 350.
Okay, well, there's a sudden collapse that we're seeing in Dish TV this morning, so do watch out on that stock, down almost 7% right now, and huge volumes getting traded over there. We'll take a break on that note, but when we come back, Jayesh Gandhi of Birla Sun Life AMC will join in from the sidelines of the CFA